10 a.m. here in Lagos. Thank you for joining us. This is Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Good morning. Well, let's get started with global oil market update as prices fell this morning but stayed within the tight range they have been in all week as optimism on the summer driving season in the United States and Europe offset concerns about demand in India and a potential supply increase from Iran. Brent crude fell 44 cents to $68.43 a barrel, erasing Wednesday's gain of 22 cents. Brent has traded between $68 and $69 for most of this week. U.S. West Texas Intermediate crude fell 43 cents to $65.78 a barrel after a rise of 14 cents on Wednesday, but still in the $65 to $66 range it has been this week. That will be a big issue for the next meeting of the Organization of the Petroleum Exporting Countries and Allies, together called OPEC Plus in June 1, where producers will have to assess whether to change their plans for easing production curbs against the prospect of Iranian supply returning to the market. JP Morgan said it did not expect OPEC Plus to hike production beyond what the group has already agreed for May through July and would decide any future increases based on the demand outlook.
And back here, the federal government is set to launch the Batch 10 of its National Policy and Digital Economy project as part of efforts to achieve a digital Nigeria. According to a statement by the Ministry of Communications and Digital Economy, the event is scheduled to hold today, May the 27th. It adds that the project includes the National Policy on Virtual Engagement in the Federal Public Institutions, Emergency Communications Center in Akure, Ondo State, Digital Economy Center, Federal University of Gashuwa, Yobe State. Others are the Digital Economy Center in Delta State University, Abraka, and the Digital Economy Center, a government secondary school, Regasa, in Kaduna State.
And the Nigeria Export Promotion Council says it is working on short to medium-term initiative that would aid easier export processes in the country as part of efforts to tap into the benefits of the African Continental Free Trade Agreement. According to NEPC CEO Olusegun Awolowo, there are ongoing collaborations with the Nigerian Ports Authority to speed up the use of alternative ports around the country, as well as construction of domestic export warehouses for commodities. He adds that these projects and initiatives are to be completed and ready for takeoff before the year ends.
And a total of 2.04 billion naira has been disbursed to 7,075 beneficiaries under the 75 billion naira National Youth Investment Fund, and that's according to the Central Bank of Nigeria. The Apex Bank says 4,411 beneficiaries were individuals and 2,646 were SMEs within the ages of 18 to 35. With the Ministry of Youth and Sports Development responsible for budgetary provisions and fund mobilization. Meanwhile, the CBN also stated that 3.19 billion naira has been disbursed to 341 beneficiaries under its Creative Industry Financing Initiative as part of efforts to inject liquidity into the employment generation and economic growth.
And on Tuesday, the Monetary Policy Committee of the Central Bank decided to hold all the key rates constant amid the weak economic growth that has been recorded in the last 2 quarters following the recession. Briefing on the outcome, it was also an opportunity for the Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, to explain the adoption of the Nigerian Autonomous Foreign Exchange Rate methodology as its official window for exchange rate. And how are investment analysts interpreting these moves? Akintoye Oyelaku, investment analyst at Codrus Asset Management Limited, joins us next. This is Business Morning. Stay with us. All right, thank you for joining us, Akintoye. Good morning. We do appreciate your time. Good morning.
Morning. Thank you.
So let's start with the do-nothing decision by the MPC, where you guys at Codrus, one of those that expected that that they were not going to do anything, or you were one of those that thought there should be a hike?
Okay, thank you very much. So basically, before the release of the GDP, we had anticipated that if the country should witness a strong growth in the first quarter, the CBN will likely raise the policy rate, and tighten the key policy tools given the fact that we had inflationary pressures. So this would be the ideal thing to do to curb the inflation number. However, once we saw the GDP performance was weak at 0.51%, we revised our view of what we anticipate what the market, what the MPC is going to do in terms of the decision. So we predicted that the MPC was going to maintain status quo, given the fact that we experienced a weak growth of 0.51%, and also we had inflationary pressures at hand. So tilting towards any of, trying to solve the problem of a weak growth or inflationary pressure would have resulted into negative consequences. So we believe that the decision of the MPC to maintain the policy rate at the current level is the best thing, so far that they are able to do, given the current realities.
All right, Akintoye, one major issue that came up at the briefing was the forex market. Before that briefing, we saw the CBN, had adopted the NAFEX rate and the INE window as the official rate. And, let's listen to the explanation from the governor. Let's take a listen.
We found out that we were no longer dealing in this so-called CBN official rate. All transactions are benchmarked against the NAFEX. I had read in some places where some said, oh, it's because we had depreciated the currency or stuff and all that. And I came out and said, we did not depreciate the currency. The market, Nigeria still operates a managed float regime where CBN will observe the market. As it deems fit, depending on its direction of where it thinks the market will be, will intervene in the market to control exchange rate in the market. That's what we're doing.
That was the CBN governor there. What's your take on that?
All right, so I think the adjustment of the official exchange rate to NAFEX is in line with general expectation. You recall that during the year, the IMF had advised the CBN to unify the exchange rate. Also, one of the conditions that the World Bank has placed for Nigeria before it can receive the $1.5 billion loan is for that the exchange rate should be unified. And we see that the CBN is moving in line with this. Whether or not it's a managed exchange rate, we have seen that Naira lost value in terms of what it was before, as in the official window depreciated. If you compare the 379 Naira to the dollar to the current 410 Naira to the dollar, so it has depreciated from the previous value of 379. So whether or not it is referred to as devaluation, we see that Naira is depreciated. Even if we can refer to that as just a managed exchange rate, it depreciated from the previous level, to reflect what the I&E market was doing.
Now, it's not just about the issue of the convergence, of the currency, but the availability of the foreign exchange there. And that has always been a major concern for businesses. So even with the so-called managed exchange rate, or whether you call it devaluation, and of course the fact that there's still illiquidity in the market, what are the implications?
Okay, so looking at the MPC's decision regarding the FX shortages that we currently have, most of the foreign investors have not really participated like pre-pandemic level, given the fact that there is this view that Naira is overvalued, and devaluing Naira, or adjusting Naira to an higher exchange rate will mean that the confidence of foreign investors will improve, and also given the current level of interest or yield environment, it seems to be an attractive market for foreign investors. So that's one of the reasons why the CBN cannot, the MPC could not make an expansionary policy by cutting down the policy rate, because this will actually affect the yield environment and it will lead to a negative sentiment for foreign investors. So as it is, maintaining status quo and with the devaluation of Naira or adjustment of Naira, if we can see more supply at the INE window, we'll likely see more foreign investors participating, which means that the CBN will be able to defend the Naira further.
All right, but going forward now, what is your outlook for the foreign exchange market for the rest of 2021?
All right, so I'm looking at the foreign exchange market. We all know that the oil sector is a major determinant for the foreign exchange availability in Nigeria. The oil contributes around 80% to Nigeria's export, and given the recovery we have seen in the oil market, crude oil prices have stayed around $65 to $70 per barrel of recent, and we're estimating that it will remain around $60 per barrel. So comparing it to what we experienced in 2020, we believe that the exchange market will be, should be better than what we had in 2020. And we believe that with this development around the oil market, we are not likely going to see a significant depreciation in the short term, say within 2021. However, looking at the long run, due to concerns about global warming, we might see the oil markets remaining unstable. But for the remaining part of the year, we believe that Naira should be relatively stable due to improvements in the oil market.
Now, talking about the value of the Naira, for you guys at Codros, what do you see as a fair value for the Naira?
So currently at the parallel market, Naira is trading at around 490 to 500 Naira to the dollar, while at the I&E window, we are saying around 410. So we believe that between this I&E exchange rate and the parallel market, we should see some kind of convergence. So if we can see improvement in dollar supply, Naira should be within maybe an average of the parallel market and the I&E window. So between that, maybe like 460, 450, 460 Naira to the dollar.
All right, the CBN completed the T-bill auction yesterday, and like what we've observed, the movement in the stop rate at the money market has dictated the tone in the fixed income market. What are we to expect, from the outcome of the auction?
Yeah, so basically, the money market has given the market a direction, especially in the fixed income market. We have seen that at the beginning of the year, despite the CBN maintaining the policy rate, changes in the stop rate at the money market shaped the market at the early part of 2021. We saw repricing following the sustained increase in the money market instrument. We saw repricing across the bond instrument. So looking at the recent trend that we are seeing, looking at the last auction compared to the previous auction, we saw that although the short and the medium stop rate remained relatively stable, at the long end, there was a marginal decline from 9.75% to 9.65%, which indicates that we are close to the peak of yields going upward, and we might not likely see a strong increase like we have seen now at the beginning of the year to date. So what we will likely see more of now is that at the fixed income market, we'll see some kind of repricing at the short and the mid end of the treasury bills market, while we should also see repricing at the bonds market. So basically, that's what the impact should look like. This will mean that for the market, we are expecting to see more stability. Even though we still expect that yields will trend higher, we should not see that significant move.
Now, looking at the equities market, the upward trend in the fixed income instrument yield has resulted into more risk-off sentiment. Considering the current realities now, how should investors weight their exposures to the equities market?
Yeah, so basically, like we have pointed out at the beginning of the year, we're expecting to see some volatility in the equities market, and we have advised that investors should look at weighting their portfolios with more fundamentally sound stocks. And given the recent performance of the market, we have seen that year-to-date, the market has lost around 5% or 5.1% thereabout. Which means that some of these stocks have suffered a lot of sell-offs. So it creates room for investors to look at the market and look at instrument or securities that offer a strong upside potential and high dividend yield, and also have strong fundamental features. Positioning in this instrument will prove to be very positive for investors, especially as we approach the earnings season for H1 2021.
All right, still talking about the equities market, it has posted a bearish performance so far, for this week as investors anticipated the outcome of the MPC meeting and the primary market options. Following the decision of the committee, what are you expecting, for the domestic bourse in the rest of the trading days, for this week and the upcoming week?
All right, so like you rightly pointed out, the investors were anticipating the decision of the MPC at the beginning part of the week. So we saw sell-offs, on Monday and Tuesday. on Wednesday, even after the completion of the MPC meeting, we saw that investors were still anticipating what the primary market auction was going to be for the treasury bills. So this also led to investors trading carefully, and market also extended the losses by 6 basis points. And what this means is that with the result of the auction and the MPC's decision, and with any season fast approaching, investors can now start to look at some of these stocks that have suffered significant sell-off, which have strong upside and expected to perform very well this year. So investors can start to take position in that. So we expect some cherry picking for the rest of the trading sessions for this week, and even in the subsequent week as we approach the earnings season, where companies will be releasing their financial performance for the half year of 2021.
All right, Akintoye, before we let you go, with the sustained recovery we have seen in the economy following the first quarter GDP release, what should Nigerians expect for the rest of 2021?
Yeah, so basically, we didn't expect much growth for the first quarter. However, for the second quarter, if you recall, in 2020, we saw a lot of COVID-19 restrictions in the second quarter, which resulted into sharp contraction in GDP. So currently, we have a weak base for 2021, and with economic reopening already present in the country, and most of the COVID-19 restrictions reduced, and the positive sentiment around the global space, we are anticipating that in the second quarter, Nigeria is going to report a sharp increase in growth. We are projecting a 3.37% GDP growth in the second quarter, while for full year 2021, we are expecting the economy to grow by 2.63% compared to the 1.92% contraction that we saw in 2020.
All right, thank you very much for your time, Akintoye. We do appreciate it, and enjoy the rest of the day.
Thank you.
After the break, Commodities Market Update is next. Do stay with us. All right, joining us now to look at the commodities market space is the head of research at financial derivatives company, Damilola Akimbami. Hi, Dami. Good morning. Good to see you again.
Good to have you.
So one major talking point after the MPC is the issue of the exchange rate, with the central bank governor still insisting that the bank is just still doing the managed floating of the exchange rate system after adopting the NAFEX rate as official rate. What's your take there?
Oh, well, like the CBN governor said, what Nigeria has been practicing right now is a managed floating rate. And we've come from a fixed auction where we're having the wholesale Dutch auction, the retail auction, and then we've moved to where we are right now, that we have the IFX and now the NAFEX, which the CBN has adopted. And if you even look at what happened yesterday at the parallel market, we saw that there was a sharp depreciation to about 493 Naira to $1. So what we are seeing right now is that speculators are taking advantage of the fact that the CBN has devalued the currency, and
because that's what everybody is saying.
Yes,
the CBN has devalued the currency. But
yes,
you know what? The central bank governor would always insist that, I mean, you don't benchmark the exchange rate based on the parallel market. But interestingly, that is the market where, I mean, an average Nigerian goes to get.
So it's because, again, of the forex scarcity issue. So what we're seeing right now is just speculators taking advantage of what is going on, and we expect the CBN to increase supply. And if you even look at what happened at the I&E window yesterday, supply, the turnover increased by over 260%. And despite that, we still saw that depreciation in the power market. Meanwhile, both the IFX and the NAFEX rates appreciated yesterday. So I think what is going on is a short-term effect, and it's going to be like what we call in economics the cobweb theory, where prices, the exchange rate keeps moving around until it gets to its fair value. Because currently, right now, the Naira is overvalued by about 23%, and we believe that as the CBN increases its supply in the interbank market, we're going to see that convergence occur. And bear in mind, convergence doesn't necessarily mean an appreciation or a depreciation. It just means that the spread between the exchange rates has reduced.
So we can't call it devaluation then?
Well, the fact that the CBN is no longer using 379, it's now using 410 as the official rate, so that is technically a devaluation. But like I said, what we saw in the power market is just short-term, and now, even before the CBN officially removed that 379 from his website and adopted 410, we already knew that most transactions were actually conducted at the I&E window. So it's just making it official what we already know. And most manufacturers even are not even using that 411 because of forex scarcity.
Yeah,
so there's a blended rate. They priced it in. And again, if they can't meet all of their demand from the CBN, they will look for other sources. So at the end of the day, most manufacturers are using maybe a rate of about 450, 460 to $1.
You did talk about, speculators actually hoarding.
Yes.
If they carry on like this, what can we expect in the market?
So I don't think it's going to take, it's going to persist for long. Like I said, it's a short-term thing, and that's why we call it the cobweb theory. So price keeps moving around, and it's unlikely because again, there's a limited amount of funds in the market. Bear in mind that as the Naira weakens against the dollar, you can't buy as much using the same. You can't buy as much dollars with the same quantity of Naira. So in that, what I'm trying to say is that, for instance, if you could get maybe $1,000 at the price of 379, now that it has moved, you can't get that same amount of dollars unless if you increase your Naira. And that's why we've even seen, even in the money markets, liquidity has been tight, and we've seen interest rates also increase. So the CBN could also use its exchange rate to manage the liquidity in the system. So I think this is a short-term phenomena, and we're going to see rates appreciate slowly in the power market.
So what are the likely implications now, looking at the commodities market space now? What are the likely implications of this move?
Yes. So first of all, the market has already priced it in, and like I said earlier, a lot of manufacturers were already using rates as high as 450, 460. And so commodity prices, especially those that are being imported, so global food prices, when we know are high, and we're seeing inflation increase in global economies. And we know also that domestic commodity prices as a result are also increasing. One, because of global food prices are increasing. Two, because of the exchange rate impact. So that will continue to feed into imported inflation. Also, the planting season effect is there. Insecurity too is there. So a lot of commodities, the prices are elevated right now, and that trend is going to continue. And again, the rains have not even been as much as one would expect for the month of May, and that would affect whatever harvest we're going to have. So let's assume on a typical year with abundant rainfall and what have you, you expect to get a robust harvest. But because, one, the rains have not been sufficient, look at what is happening in cocoa, or to cocoa rather, in the southwest region, as in it's going to affect the mid-crop and the main crop for the 2020-2021 season. That, coupled with the fact that a lot of farmers, because of the insecurity, can't even go to their farmlands to plant. So output levels are definitely going to be affected, and you see that play out in the crop production numbers for Q2 and Q3 2021. Yeah,
but of course we saw that the April inflation declined a little bit. Are we likely to see that trajectory, going forward with all of these issues? Now we're seeing, of course, call it devaluation, call it managed exchange rate, pass through, or whatever, exactly. And then we have the insecurity issue, and then we have the planting season and all of that. So is it possible that perhaps the May inflation is still going to decline? Are we going to see that decline in trajectory?
Like what I like to say is, that, what I like to tell people is that, first of all, inflation is a year-on-year analysis. So you are comparing food prices now with what they were last month. So the fact that April inflation slowed to 18.2, what we're saying is that it just increased at a slower pace, not necessarily that food prices have declined. And as long as the fundamentals are still the same, and by that I mean the insecurity goes unabated, planting season effect, imported inflation, the exchange rate and forex scarcity, food prices are going to remain at current levels. I was talking about it on Tuesday with Ini and Ladi, that, look, tomato and pepper, the prices are going to increase come May, come June. So I think in the next couple of months, May inflation numbers are going to, if at all, that decline that we saw in April, I think is more like a blip and not a trend that we're going to see. And we should see food prices continue to inch up.
Okay, so I saw on your slide that the FPI, declined. What's pushing that?
Well, first of all, foreign portfolio investment is basically investment in securities and other financial assets, so the likes of equities, bonds, money market instruments, and they're what we call hot money because they come easily and they leave also as quickly. So the slightest trace of uncertainty, the slightest trace of insecurity, and we know that these are some of the factors that play in the Nigerian economy. There's so much insecurity, policy uncertainty, there's tight regulation also, so investors are unsure of what is going to happen next in terms of the policy
even the liquidity
environment.
problem.
There's the liquidity problem. So there's a backlog, and that has contributed to the decline in FPIs. Also, the COVID impact too. We need to mention that. And even what the CBN is trying to do right now, we know that sometime in 2019, the CBN had prevented foreign portfolio investors from participating in the open market operations instruments. But now, in March, the CBN has allowed foreign investors to participate in the market, basically just to try and increase the forex inflows, because again, forex scarcity is a major issue. So we believe that with this that is now being in play, we should start to see an improvement. But again, the fact that there's still that backlog, a lot of foreign investors are yet to repatriate the funds, so they might be unwilling to come into the market now until they see a clear sense. But fine, the CBN has done some things. They start convergence, and also adopting some of the requirements that all these multilateral agencies have put in place. So I believe that should help in the medium term.
And what would that mean for commodities markets?
Yes, so for commodity markets, again, as long as we're still in planting season, prices are going to remain elevated. But if the forex inflows improve, then the CBN has more, the CBN's ability to intervene in the market increases, and then we see an increase in supply. That should help the Naira stabilize, and we should see further convergence. And possibly we could see the Naira stabilize around, let's say, 411, 415, if that happens, if that happens.
All right, we've also seen the all-share index on the NGX continue to, decline.
Yes.
With commodities-dependent companies also losing, what's the implication of this?
Yes, so obviously commodity-dependent companies are feeling the brunt of what is happening to food prices. And if you even look at the likes of Nestle, Cadbury, Honeywell, all of them, their year-to-date prices, they're all in the negative because of what is happening. And most of them are also struggling to meet their forex needs. They also have to consider, okay, can we pass this increase in costs to our consumers, or do we have to bear the brunt of it, or do we have to maybe miniaturize and reduce the quantity of what we're producing so that we don't have to necessarily increase the price? So these companies are struggling. Most of them are struggling also with the issue of power. Some of them have their own independent power plants, but then again, access to power is a major issue. So that is what is at play, and is also contributing to the decline in the stock market.
All right. Also, out there, NNPC just signed a $10 billion Bonga Field investment deal. What would this mean for Nigeria's oil and gas sector?
Well, this, first of all, it's a good thing, because at least that just shows that the NNPC and its partners, likes of Shell and co, they've been able to address some of the lingering issues and disputes over the petroleum sharing contracts. So that is a good thing, because at least it's also going to bring about $10 billion worth of investment. And when we're talking about FPIs, that I said that they are called hot money, and they easily, as they come in, they also get easily, and they also leave the economy. Yes, the capital flight. FDIs are actually more dependent because they stay longer. But bear in mind that also Shell on one hand, yes, has signed this, but Shell is also divesting some of its onshore, in fact, all of its onshore assets, not just Shell, Total, ExxonMobil. Some of these IOCs are also divesting their assets because of because of insecurity, the pipeline vandalism. So it's on one hand, yes, so to an extent, we are getting more from the FDI, but more importantly, as long as those issues are yet to be addressed, we might start to see a lot of our investors pull out from the system, and it says a lot about the perception foreign investors have about the economy.
And other economies are actually switching to cleaner energy at this time, So where are we in that,
In fact, so Shell, one of the reasons they gave for the divestment is because they're saying that they're switching to their net zero carbon emission by 2050. So Nigeria also has to position itself, because that's where the whole world is moving towards, to clean energy, alternative energy. So, and that just says that oil is gradually becoming obsolete.
In other words, we shouldn't be talking about oil.
Well, Nigeria is going to continue to talk about oil until it has another alternative. Yes, but we're taking the steps.
We should be planning now.
Baby steps. Those steps are not huge enough, but like you rightly said, we have to start planning. We can't wait until oil is totally obsolete and we find ourselves in the north. Yes.
Exactly.
Well, in any case, oil prices trending up despite weak demand from Asia and India. So what's your medium to long-term outlook?
Medium to long term, I think like in this world of commodities with how volatile things are, I think that is a long term. But what we are seeing right now is that oil prices, I think, are going to continue to trade around current levels. If they touch $70, well, maybe bear in mind that there's Iran's supply that we need to consider. And we're also seeing a gradual recovery in the US, in Europe, in China, and these are major oil consumers. So I think at the end of the day, oil prices are going to balance out. There's a meeting June 1, and they're going to be considering whether they should extend the output, the increase in production, increase in production quotas, or leave things the way they are because of Iran's oil, which will be about 2.2 million barrels per day. So I think oil prices will stay around this level, and the market would balance out to find its equilibrium.
All right, let's look at the domestic commodity prices. Take us through the drivers in that market.
Yes, the drivers are the same. planting season, insecurity. So I think we've talked about them over and over and over again, and we're going to continue to see that.
On the uptrend.
That's still on the uptrend. So inflation dipped in April. Food prices are not coming down. Ladies, go and stock up your house. Yes.
Yeah, someone was telling me, I think that was yesterday, say, oh, have you bought your tomato?
Yes.
Oh, from June.
Yes,
I mean,
exactly.
It's going to be very expensive.
Yes. So it's better to buy it now, which at around 20,000, because it might increase further. So stock up.
Stock up.
So,
stock up.
Laddie,
stock up.
I guess we'll have to do that.
Yes, after the show, I'll go and stock up.
Okay, thank you very much, Dami,
Thank you for
sharing
having
your
me.
time
Thank you so much.
with us.
Thank you.
Okay, we take a moment. We'll be back.
Welcome back. Still watching Business Morning. Let's look at what the market numbers are saying now with Aniete Edet. Hello, Aniete. What's the market saying today?
Good morning, Laddie.
Good morning.
Yes. Yesterday, well, it's no difference. It's still the same red. I don't know. Your color is different, but this is what the market looks like as at midweek transactions. The all-share index is down 0.06%. That means we lost an additional 12 billion naira. And then month-to-date, we're down by 4%. Year-to-date, we're down 5.1%. And then, of course, the sectoral performance not looking too good. Just the insurance sector, it made some rebound yesterday. And, of course, in terms of the volume of transactions, we were down by 18.81%. So, and the equities market is not really looking too good. So let's bring Mohammed Kaide, who is the head of securities dealings at APT Securities and Funds. Good morning, Mohammed.
Good morning.
Okay. So now we are at new lows for the markets index as well as the equities capitalization. Can you bring us up to speed at what's going on at the market at the moment?
Thank you. It's a pleasure to be here with you. But I quite an impression that everything is red. I think the posture of the market is not as that being portrayed. The market loss is 0.06. That's just only 6 basis points, and that shows that the current level that we have is a situation whereby the investors are a bit quiet for now. And you can see the volume traded for the day is not that huge. We have about 1.8 traded for the day, and volume of shares traded is around 203 million. So if you look at the trading so far, you realize that you see a situation whereby the traders are very competent with low cap stocks. They are just trading with low cap stocks. Though what we have right now in the market is a situation whereby we have low volatility, where the market there's no much spread within the highest and the low for the day. So the activity to the market now is at the quiet level. The market is not as big portrayed as red as far as I'm concerned, because the loss is just 0.06% of what the market has done.
Okay, Mohammed, thank you for bringing us up to speed with what's going on at the equities markets. That was Mohammed Kaide, head of securities dealing at APT Securities and Funds. So we move over from the equities to the unlisted securities market. It made some rebound yesterday, 0.51%. Market cap also up. Volume of transactions up, also going up. And then we cross over to the debt market. FGM bonds, much of activity all across board there, except for the CBN bills, which had no activity there. And of course, crossing over to the OMO securities, it was much activity there, and that's because there was a primary markets auction yesterday, and then of course we saw much of activity at the debt market. So now it just shows you that most likely investors are moving from equities and putting their investments in the fixed income market. So now to give us more updates on that market, let's speak to Kaya Ewebi, who is a fixed income dealer at FSDH Merchant Bank. Thank you for joining us.
Good morning. Thank you for having me.
Okay, yeah. So now we can see that there was much activity at the OMO open market operations. Can you give us an update of the primary market auction conducted on Wednesday?
Okay, the DMO conducted the primary market auction yesterday, where a total of 151 billion was sold, as against the 63 billion on offer. The auction was oversubscribed, with overwhelming demand for the one-year paper. About 95% of the sale was allotted to the one-year paper, while the other two papers were undersubscribed. 3.12 billion was allotted on the 91-day paper, 4.1 billion on the 182-day paper, and 143.8 billion sold on the 364-day paper. The stop rate for the 91-day and 182-day papers were maintained at 2.5% and 3.5% respectively, while the 364-day paper dipped by 10 basis points to close at 9.65. We expect the market to trade with bullish sentiment on the NCD papers today, as market participants will try to fill their net demand at yesterday's auction.
Okay, so thank you for bringing us up to speed, Kaya Ewebi. So that was Kaya Ewebi, fixed income dealer at FSDH Merchant Bank. So, Ladi, you can take a look at it.
Well, Mohammed Kayode said it's not red as portrayed.
Well, I don't know. We have lost more than 800 billion just this month. Okay. We had just about 3 positive sessions in the month of May, and the month of May is turning out to be one of the worst. At least this is the 5th month in the year. So,
all right. Well, I guess it's not red enough to Mohammed. Anyway, thank you for the update, Adniete. We'll take another quick break now. When we come back, we'll do an opening call to London. Do stay with us. This is Business Morning.
Good morning. Well, Boris Johnson is facing mounting pressure from Joe Biden and grassroots activists to be bolder at next month's G7 summit, amid signs that rows over vaccines and tax will dominate what the Prime Minister hoped would be a low-key event. What are we learning about this?
The G7 is main stage diplomacy transition from being virtual to being actual, and there's lots of topics of discussion. One of them is the prelude to COP26, which will be taking place within the United Kingdom in November to try and renegotiate how big nations are going to tackle the climate emergency. But as you said, there are some more pressing issues. One of them is vaccine nationalism. Even though we are not going to be expecting any major heads of state from Africa invited to G7. We know that the Serum Institute of India and its suspension of the AstraZeneca vaccine as part of the COVAX facility has really hampered the African vaccination rollout program. That's going to be a topic of discussion, because there have been some accusations that some of the big nations, particularly America, are hoarding vaccines that could be used elsewhere. And again, another topic is the corporation tax. One of of Biden's big 100-day agendas of his new administration is to raise corporation tax and give it a cap across the globe of about 25%. Well, that's what he said. It was 21%. It's now gone down to about 15% to try and stop multinational companies exploiting some countries that have a much lower rate of corporation tax. Now, it seems to have got the backing by some of the other G7 nations, notably Italy, Germany, France, Canada and Japan. We haven't really heard much from Rishi Sunak, which is where the pressure is coming from. However, I think the British government will say in March during the spring budget, the Chancellor did say by 2023 he wants corporation tax in the UK to be about 25%. I believe that's the defence that they'll be putting. But of course, Joe Biden will be cementing that policy, and I believe Rishi Sunak will be speaking to central bank governors as well as G7 finance ministers on Friday, so we'll be getting an update on that before the weekend.
Absolutely. Well, Uber is to recognize the GMB trade union in the UK for its private hire drivers, marking the first deal between a union and a gig economy ride-hailing service. Why is this important?
Yeah, it's important because we know the gig economy and these kind of last-mile delivery apps have been facing increasing pressure, particularly in Europe over the past couple of years about its labour laws, and they want reforms. One of the reasons why the Deliveroo IPO flopped in London is because a lot of investors were running scared about how sustainable their governance structure can be. Earlier this year, there was a ruling by the Supreme Court in London that Uber workers must be deemed as, full-time workers, and that they should have an idea about their working hours, etc., etc. Now, Uber have agreed to work with GMB, which is probably the biggest union here in the UK. I believe they represent about 600,000 workers. They're now going to be looking after some of the issues that Uber's 70,000 workers in the UK have. And again, it's really part of the same issue, I think, especially during the pandemic, where gig economy workers were heavily relied upon. Obviously didn't get, the national clap that NHS workers received, but they were working a lot of hours. So they do want to have more of a say of their working day structure. And, Uber are the first app to agree to work with a union. So certainly this is seen as a monumental, probably historic movement for gig economy workers, not just here in the UK, but across the world, to try and get them better working rights in the days and years to come.
That's interesting. All right, we'll get more updates from you later in the day, Juliana.
Thank you.
Okay, we'll take a peep into the crypto markets with Ladi Williams. Well, Ladi, Iran has just announced a 4-month ban on the mining of cryptocurrencies such as Bitcoin after cities suffered unplanned blackouts. That buttresses Elon Musk's concerns on how much energy mining of Bitcoin consumes.
That's why most cryptocurrencies are trying to move away from the proof of work system and trying to get something else that doesn't consume as much energy. But, it's a young market. It's still moving, and new technology for that matter, so they will improve at some point. Market cap, $1.69 trillion, down about 4.87%. 24-hour volume is down about 15.10%. Let's look at the charts now on the FTX. You see Bitcoin is still maintaining at ATM, still maintaining that level at 38,000. The near trend is still quite bullish, still close to the 200-day moving average. We could get across at the MACD here on the one-day chart. It is possible that might happen. But the key levels to watch short-term is the $31,153 level, the $64,600 level for medium-term, is to watch at the moment. Price of Ethereum, $2,757, down about 4.11%. 24-hour volume, $40.99 billion. Let's get more insight now from Kalu Aja, financial planner. Hello, Kalu. Hello, Kalu. Good morning.
Buddy, how you doing?
Good morning. Great to have you, Kalu. So I saw a headline that the U.S. SEC is planning new rules for SPACs and crypto tokens. What can the crypto community expect as new rules going forward?
Thanks, Larry. I think SEC is looking at regulating the exchanges right now. To them, it's just like all commerce markets, lots of coins being created, no regulation, no taxes, no KYC. So they want to regulate really who can come in and play in that market. Also, the IRS wants to regulate transfers from moving more than $10,000 per se. They want to know who is moving it. So I think that's the direction we're going. Regulation of the exchanges per se. They might leave crypto alone.
Okay.
Yes, exactly.
Okay. All right, looking forward, how should traders be playing the market right now?
I would say cautiously. Right now it's a flux, lots of things happening. China is cracking down on crypto. You know, Elon Musk is still tweeting, I think, but most importantly, I think it's a tax situation.
Okay.
People are buying crypto because there is anonymity with it. You might not pay taxes. Now, IRS is looking at that. Joe Biden wants to raise capital against taxes. So there's a bit of a slowdown in terms of, say, listen, can we hold cryptos and can we avoid taxes?
Okay.
But look at it this way. I have not heard any institutional seller or institutional buyer selling.
Okay.
I haven't heard MicroStrategy selling, nor have I heard
All
Tesla
right, Kalu, sorry,
selling.
we've run out of time, Kalu. We'll continue conversation tomorrow. Thank you so much, Kalu. Okay. All right, Jimmy, there you have it. It's not looking so bad.
Cautious, cautious, cautious.
Caution, yeah.
That's the advice we are getting, as always. All right, that's it on the program. Thank you for watching. I'm Chimezi Obi Iwago.
And I'm Ladi Williams. Thank you for watching.